Well, JP, welcome to the podcast.
Thanks, Matt, for having me.
Absolutely. It's a pleasure. Would you mind telling everyone your position here, as well as kind of what brought you to American Financing?
Sure. So I'm the Chief Operating Officer here at American Financing. I started in 2014. I was from Atlanta. I worked in another mortgage company in Atlanta, pretty big company. I was there for almost 10 years and had a buddy that got recruited here to work in American Financing, and he kind of told me a little bit about it. It was really good. It was exciting, and relocated my family across the country. My wife has some family close by, so made that move a little easier, and always enjoyed the Colorado atmosphere and weather, and definitely has been a good move for us.
And how long would you say you've been in the mortgage industry?
I started in 2005.
Oh, wow. So you started right before the big boom and the crash.
Yeah. Rates were similar actually to where they are now when I started. And then we had all the meltdown stuff, Bear Stearns, all that kind of stuff. And then, in 2009, rates started coming down and we had a pretty big boom. And it was interesting time to be in the industry.
What are some things that you maybe learned through the process of that early 2005, 2010 sort of period that you have been able to learn from and sort of bring to your job now?
Yeah, it's, there was a lot of interesting loan programs back then that, felt like it might have been good for the consumer, but, it wasn't really truly, targeted at consumer friendly. It was more lender friendly, the option arms, that kind of stuff. Property values were going up and it seemed like it would make sense. Don't worry about it. The value of your house is always going to increase. It's okay if your mortgage balance goes up. But those things, learning out how to look out what a customer, what their situation is, what their bills are, what they make, and making sure that we're putting them in a program that they can afford and they can actually pay off and putting them in a better financial position are stuff I learned at the beginning. I was fresh out of college. I was like, oh, look, everybody's doing this. It's got to be a good program. We wouldn't have it if it wasn't good, but that wasn't the case back then. But which I think is some of those regulations have helped with that kind of stuff to at least put in programs. We have to make sure people can repay the loan. You can make sure there's benefit. Most states, require a beneficial form to be filled out so you can truly show that you're doing something that's in the customer's interest. And that's definitely some lessons we learned. Yeah,
the aspect of people being able to call in here, I think is really interesting. You can call anywhere, but you're not going to get a person, or if you do get a person, it's not a person connected to the business physically whatsoever. Typically they're overseas or whatever. How important is that to the company that there's always a live human being to answer the phone and that person is in office in Denver right now?
A few years ago when everything was crazy, rates were low, there was a lot of companies offshoring a lot of parts of the process to India or other areas. And we never went down that route. We wanted to be able to make sure that we knew who was touching our customers' data, we're really big on security, privacy, making sure we have a great reputation. We're doing things the right way. So we always want people that are here that we can talk to and make sure they're giving the customer experience the right experience.
Yeah. And then what is it kind of like for a person when they do, whether they call in or they submit a form online and then we call them, what is it like for them sort of at the top where they start with one of our customer service agents and then work their way through the process?
Yeah, that first call, whether we call you and you answer the phone or you call us, is really going to be a little bit of fact-finding, information gathering. We're going to take a little bit of information to do a loan application, try to figure out what your goals are, try to keep it brief, run through those questions and, get to your goals. And then we're going to set an appointment for a follow-up. And at that appointment, the follow-up is going to be with our senior mortgage consultant who's going to call you to go over what we can do for you. And if for some reason there isn't something we can do, we'll explain it to you on that call as well. But if we can help you, we'll walk through the ways where it's going to help you, how it's going to be beneficial, monthly savings if you're doing a refinance or you're getting money out for college or whatever it is. We'll go through all those and explain the terms and, walk you through the documents so you understand what you're getting into. Typically,
what is the time period? Because we can close a loan in 10 days and as little as 10 days. But what is sort of the sweet spot for someone to expect for being able to close their loan?
And a refinance is generally between 25 to 30 days, depending on the state. If we have to get an appraisal, title, those kind of things. And, depending on every situation, every customer's got a little different financial situation. Self-employed borrowers might need to provide a little more documentation, but the right situation, we can close in fast as 10 days, but on average, I would say between 25 and 30. Once we get everything in, you've signed all the initial documentation from when we get into processing, it's about 25 to 30 days from that point.
What are some other ways that can speed up that process a little bit?
Yeah, I mean, if you're a consumer and you're refinancing and you've done this before, you're familiar with what you need. The more information you provide up front before that first appointment with our senior consultant, the faster. We do have an online portal, or you can provide your documentation to our customer service team in other ways, and they can get it into the file. So that way, when you're talking to that consultant, after you look at it and you agree to the terms, the file's ready to go to processing at that point in time. You're shaving off a couple days of document gathering, just getting everything ready. Um, the appraisal is the biggest one. I mean, a lot of appraisers can get the appraisal back in 5 to 7 days, but then they're also trying to coordinate a time with you. That could be a few days down the road, plus 5 to 7 days. And, we got to get it back. We got to QC the appraisal, make sure it's good and all that kind of good stuff. So it definitely takes time. It's not as long as it used to be, but when you're adding that on to something that's taking 10 to 12 days, you're getting into the 20s when it's another 10 to 12 days. So.
One of the things that really makes American financing unique is that everything is done in-house.
Right.
And not just in-house, but people are physically next to each other, so to make this process go smoothly and quickly. Can you give me an example of how that benefits our potential clients?
Yeah, I mean, ultimately, mortgage has pretty standard guidelines across the industry in general, but not every situation is the same. Customers might have different documentation that's a little different. You might see something that you don't see too often. It's a little complicated. So we have our underwriting team here in this building here in Denver. We have our underwriting manager here, processing managers, sales managers. If we're talking to the customer and our underwriting team doesn't understand something, or they're asking for something that doesn't necessarily make sense, we can walk over, we talk to them, we walk them through they can see it, we point it out on the documentation, and we come to a solution fast. Really on a purchase transaction, I think this is one of the areas we really excel. We have a customer, a first-time home buyer. They might be, certain things that are restricting us from being able to close a loan potentially, but we're able to look at it and find a creative way. We work with the underwriting team, meets the guidelines, helps our customer get into a house. Other companies, like they're employing their underwriters, but they might be based in a different building, and you're sending them something. You got to wait 24 to 48 hours for them to respond. Then you send something back, and you're going back and forth. You're playing ping pong 24 to 48 hours. Whereas here, we're solving the problem right face to face.
We're able to give people loans that maybe other places aren't, or we're able to help people in ways that maybe other businesses aren't willing to do. You give me an example of how that works from the first time home buyer side, as well as for a refinance side.
Yeah. So on the refinance side, I mean, we offer loan programs down to a 490 credit score. If you don't have any mortgage late payments, you've been paying those on time, we potentially have an option for you, especially if you have some equity. We also have a credit care department that if you're near miss, that will walk through. It's no cost to the customer. Obviously, you have to use some money to repair some things on your credit, but we'll guide you through that. The consultation we don't charge anything for. Just an example there is Fannie Mae just recently allowed for those lower credit scores below 620. We were really progressive, and the fact that we saw an opportunity to help our customers. We see these customers come in all the time, and we do our best to help them out through an FHA loan. They've offered down to 500 for a while, but to get a conventional loan where you don't have the mortgage insurance below that, we were really fast on it. Worked with our warehouse banks and all that kind of good stuff to get the product available to our customer fast, and we're seeing a lot of good success helping these customers. On the purchase side, we offer a lot of down payment assistance. So for people that maybe haven't saved up a ton of money, but you're able to get into a house, maybe even cheaper than you're renting, if you can, save up a couple months worth of your payment potentially, or even less than that. We also offer low credit score programs for purchases too, for the credit challenge. But what we tend to do is we want to make sure people can afford it. They know what they're getting into. So we'll work with them through our credit care team as well to ensure that, their bills are in a good position where when they're getting into the house, we're not setting them up for failure. We're trying to set them up for success.
Well, I mean, that's the whole thing, right? Is I think when a person finds himself with a low credit score, there's a lot of circumstances that might not have been necessarily their fault. Things didn't go in their favor. They found themselves in this bad situation. One of the greatest ways that you can get out of that situation is home equity.
It's their biggest financial commitment that we're making. It's also appreciating in value versus depreciating in value. You can borrow at much lower interest rates than you would at other ways to against your house. I mean, it's a cornerstone for your financial freedom. So being able to help people get into that, to start it, or if they're already in there, to utilize it in the proper way to take care of some other things that are, higher interest or depreciating assets, stuff that you're never going to pay off unless you really do it this way, unfortunately.
Yeah. I'm curious if you can kind of give us an idea. So there's the concept of the blended rate.
With the blended rate, if you're if you have like a $300,000 first mortgage at 2%, but then you need $250,000 and we're borrowing at like 9% or something, that blended rate could end up being higher than doing a brand new first mortgage anyways at 5.5% or whatnot, even though you're like, hey, I don't want to get rid of my 2%. If you're doing a large enough second mortgage at a much higher interest rate than your first, the blended rate still becomes higher. So then it would make, that's why you should talk to us though, because we can walk you through that. We'll look at it and we'll see which one makes the most sense. If it's, sometimes it does still make sense to keep the first, and the blended rate is going to be better than the current rates out there. But, we want to put you in the better situation, the lower total payment.
Well, and that's the part of that blended rate too, is if a person needs to refinance to pay off personal loans or credit cards, they're paying 22%, 25% on this, but their mortgage is 2%. Well, if you get them into a loan for 6.5%,
100%.
they're golden.
Yeah, exactly. Now that's another way to look at it. Exactly. Yeah. Like regardless of what you're paying off, credit cards are probably the worst. They're going to be in their 20s right now for most people, with what's going on here. It's expensive out there. Inflation's crazy high, but going to the gas pump, I filled up my truck the other day, $100. It's crazy. But just all that kind of stuff, it's hard to pay those off every month. Well, what we'll do is we'll combine them into one payment. The interest rate might be a little higher than your current first mortgage, but the blended rate's lower, like you said. And then you have a payment you can afford each month that you're paying off, and your credit cards are gone, or the credit card payments are gone, and your credit score improves because you're not borrowing all that utilization on your credit report, credit cards.
So when we say blended rate, we're really looking at the interest rate of all of your debt combined and averaged, and then seeing if we can get you into one loan that's at a rate lower than that.
Right. Yeah, we'll look at it from multiple ways. Like if you're looking at first or second, we'll look at the blended there. If you're looking at a new first, combining all that stuff like you were just talking about, absolutely, we'll say, okay, even though you're at a 3% first, it's not really doing you a lot of good because you're paying 25% over here, or you're not able to make your monthly payments over here, and you're just paying minimums, and you're never paying off anything more than interest. Where you can get them all into one, low loan. That's a much better blended rate.
How would you characterize working at American Financing? What's our culture like? What's it like here?
Yeah, it's definitely very fulfilling. I think financial stress is probably one of the worst things out there for most people. Just to be able to help somebody in that kind of way is very fulfilling. A lot of other places that I've seen or heard about, it's a grind. We don't see it as a grind. We come here every day helping people, and we're excited about that, and we like doing it, and we get a lot of fulfillment out of that.
I would actually argue that you're going to need someone helping you buy a home more than you're going to need a good surgeon.
Yeah, hopefully most of us don't have to deal with a good surgeon or one of those good doctors. But if you do, obviously you want to have a really good one. But you're right. Most people on average are, buying or refinancing 7 times in their lifetime. It's probably even more now as we go on. If you find a good person the first time, hopefully it's us. You'll have us all the way throughout the process, and we'll get to help you every single time. And, we'll become really close compatriots and, consultants for you, and, get to see you through a lot of stages of your life. And hopefully you never have to have that excellent surgeon. But if you do, maybe it's just once.
Yeah. But you can call us for an excellent, excellent mortgage.
Yeah. Make sure that we'll take off the financial stress so you don't have the heart attack, hopefully.
All right. So last thing, what would you say to someone who has seen our ads maybe on one of the podcasts or hearing on the radio or even one of our TV commercials, and they're wondering, is this the company to go with? What would you tell them?
I would say definitely give us a call. I think you can get a good impression by a company by talking to them on the phone and calling them, and you'll talk to us and you'll feel comfortable. I believe in that. I stand by that. Like when you talk to us, it's going to be a different level of service, a different level of conversation than you'll get through other companies. And just talk to us.
Yeah, I agree. Just give us a call.
Yeah, just give us a call.
There's a lot that we can do for you, for sure. So cool. Well, thank you for doing this.
No,
appreciate it.
Good talking to you.
All right.